You're watching an interview with the Oxford Political Review. I'm Leah, the Managing Editor, and joining me today is Brian Wong, the Editor-in-Chief. And we are honoured to be joined by Lord Mervyn King, a British economist, the former Governor of the Bank of England, and a crossbench peer in the House of Lords. Lord King, thank you very much for joining us.
It's a pleasure. Nice to be with you.
We wanted first to ask you about the UK government's response to the COVID-19 crisis, and in particular, the response of the Treasury. What have you made so far of the spending commitments put forward by Rishi Sunak?
But I think the first thing to say is that no one can envy any government having to deal with this situation. Governments are having to navigate a path between two very unattractive outcomes, sets of rocks you could imagine. On the one hand are the risk of rising infections and deaths from COVID-19, and on the other hand is the loss of incomes, output, jobs and GDP as a result of the measures which governments feel they need to take in order to prevent the spread of the disease. So navigating between these two is not only very difficult, but it's a question of trial and error. I don't think there's any way around that. This is unprecedented. You can't switch on a computer formula to tell you what to do. So I think that the Treasury made the right call in saying that if the government feels that it needs to shut down the economy in order to prevent the spread of the disease, then it really ought to replace the lost revenues of businesses during the period of the shutdown when the restrictions are in force. So I think the furlough scheme was absolutely the right thing to do. And if anything, I think you could say that it's a mistake perhaps to link the end of the furlough scheme to a calendar date as opposed to information about the state of the spread of the disease. If we do get a serious second wave, that question will come back again. Because even if there isn't a national shutdown of the economy, if people choose to stay away and those businesses continue to suffer, I think it's costly to allow businesses to fail because of this disease, rather than waiting until such point as GDP gets back, somewhere close to where it was before the shutdown began. Because during that interim period, the market economy is in essence suspended, and we will now have to wait and see how quickly we can get back, not to normal, because I think it'll be a different set of situations. So I understand the Chancellor doesn't want to give a permanent guarantee to businesses in existence now, because many will disappear as a result of changes in the pattern of spending, and other businesses will grow and create jobs to replace those that are no longer in existence. But I don't think we're anywhere near that point yet.
And how do you think the Bank of England should go about in supporting the economy in the meantime? Because as you flagged just then, there's always the risk that the second wave might come about maybe in September or October. And if we adopt measures like, say, QE, quantitative easing, or even more sterilised and staunch policies, we might end up with very little manoeuvring room as a Bank of England goes when it comes to a second or even third waves in the future.
So I think there is a general misconception about the role of central banks in this situation. People seem to have come to the view over the last decade or so that central banks are the only game in town, and that if the economy, for whatever reason, starts to slow, the answer has to be more central bank action, more monetary easing. I think that's a serious intellectual error. There are many reasons why economic growth can falter. Only some of them are amenable to central bank monetary policy action. And I think it's a mistake to think that if the economy is slowing, what we should start by doing is to ask the question, why? Well, we know the answer to it now. It's because the government has shut down the economy. If the government is shutting down the economy with one hand, it doesn't make sense to try and stimulate it with the other hand. You need to wait until such point as the restrictions have all come to an end, and then find out why it is that it's taking some while to get back to normal. or at least back to a level of GDP as a whole that is close to where we were. And I think the mistake in all this is to believe somehow that if once the restrictions have been removed, the reason for it taking time to get back is because people are nervous about going out to restaurants, nervous about using public transport in order to get to work. There seems evidence for both of those. If that's the reason people are spending or going to work, and the idea that somehow another cut in interest rates or a little bit of monetary stimulus is going to remove that insecurity strikes me as rather naive. And this is a crisis not for central banks, but for governments. Now, central banks have a role in, to use your words, supporting the government. I think in mid-March, when financial markets were very disturbed, there was a case for the provision of temporary liquidity to ease the problems in particular financial markets. That wasn't a general economy-wide phenomenon. And indeed, what's interesting is to see how financial markets have operated quite normally right through this crisis. The government will obviously have to borrow a large amount of money. That's going to increase the national debt significantly. That's why we have a national debt. It's there to cope with situations of this kind. The central bank can help in easing the time path or over which the government has to issue new debt and borrow, and the Bank of England is doing that. But I think the idea that central banks are there to print money to finance whatever deficit emerges is not correct. Temporary smoothing of the time path of government debt is one thing, but underwriting the issuance of government debt over a longer term is quite another. And I think Andrew Bailey at the bank has been very clear on that. The Bank of England will determine how much QE it engages in order to be able to meet its inflation target remit. And I don't think we should worry too much about the burden on the public finances, because we went into this crisis with a budget deficit that was completely manageable. And if we can come out of it by asking the question, well, do we need to raise taxes in order to finance new spending commitments over and above the ones that were in place when we went into the crisis? Well, we may have to do that, but we certainly don't need to raise taxes in order to finance the extra debt that was issued, because if we get back to a situation in which what's called the primary balance of the government budget, which is the budget deficit excluding interest payments on that debt, and actually, since governments are in a unusual position of being able to borrow long term at interest rates below the growth rate of the economy, the ratio of the national debt to national income will slowly but steadily come down. So we are fortunate that we went into this crisis having dealt with our very large budget deficit that existed 10 years ago. And we needn't panic, therefore, and it's appropriate for the government to allow the national debt to rise quite significantly during this crisis.
As we segue into this section about Brexit in just a second, Lord King, I'd just like to raise a more theoretical question here about the central bank, which you touched upon. Some have argued that central bank governors across the world, and not just in the UK, but across the world, ought to be perhaps more so-called democratically elected with greater check and balance mechanisms against their decisions, whereas others have suggested that a shift towards technocracy and independence from populist tendencies and the whims of the people, that's what's perhaps more important. And realistically, there needs to be a balance between the two. Do you think the UK, per se, has got the balance right between these two ends? And if not, do you think there's room for reform in that sense?
No, I think the UK has got the balance right. And I think the structure we have works extremely well. The important thing is that central banks should not stray outside the territory which Parliament has given to them. And in particular, they should not be taking quasi-fiscal actions. I think both the European Central Bank and the Federal Reserve have actually strayed into that territory, and questions about their independence will become part of the political debate down the road. But it's not true in the United Kingdom. The Bank of England has a very clear remit to meet its inflation target. That remit is set by Parliament, not by the Bank of England. And I think the independence of the bank is very important to enable the Monetary Policy Committee to have a group of 9 people chosen for their expertise to debate. People will disagree inevitably, but we accept a majority vote is probably the best way to make the decision. And doing that forces the bank to explain its reasons for the decisions it takes. And then they can be challenged by anybody in the country, and they are. So that we have a lot of independent commentators talking about what the bank is doing. This, I think, is a very sensible way to run monetary policy. And it works well, provided that the central bank doesn't stray beyond its remit.
Lord King, moving on to a further set of economic challenges in the future, Brexit, of course, is a subject which has been overlooked somewhat in recent months. Understandably, government's priorities have been on the COVID-19 response. I wanted to ask you, you've been particularly vocal about your views in the past on Brexit. You were highly critical of Theresa May's withdrawal agreement, likening it to appeasement and vassalage. First of all, what did you make of the amendments that Boris Johnson was able to make to that withdrawal agreement? And what sort of long-term relationship, if any, do you see emerging out of these ongoing negotiations?
Well, the point I want to make right up front is that I don't think that Brexit is the most important economic challenge facing the United Kingdom. There are many much more serious and important ones. Getting out of the difficulty of COVID-19 is one of them. But once we're through that, we have to recognise that the United Kingdom has one of, if not the lowest saving ratios of any of the major economies in the world. And this means that we can't finance more investment unless we also save more domestically. And getting the balance of our economy right, shifting away from consumption and towards exports, import substitutes, and net investment is going to be a very important part of shaping the economy for the next couple of decades. In that respect, I don't think Brexit is the major issue at all. And it is slightly odd that during the campaign, both sides of the referendum campaign exaggerated their odds and presented what John Kay and I in our new book, Radical Uncertainty, calls bogus quantification. They sort of made up, used misleading analogies in order to bolster their case. And I think it backfired rather badly because people can see through that. The brunt of the argument here in economic terms was actually dealt with much more satisfactorily in the previous debate about whether Britain should join the the common market as it then was in 1973 and the referendum that followed it in 1975, when people talked about trade creation and trade diversion. And most economists, interestingly, were against joining the common market at that point, strictly on economic grounds. I think it's difficult to believe that moving away from being in the European Union to trading with those countries on the same basis that we trade with the rest of the world, that is on WTO terms, if we fail to get a long-term trade arrangement, it's the most extreme outcome. It's very hard to see that that is a dramatic change for the United Kingdom. Joining the EU or common market didn't transform the British economy, and I don't think leaving it is going to transform the British economy in either direction. There will be some trade diversion and some trade creation. And the fact that we are trading with the US, China under WTO terms, and our trade with many parts of the world, particularly Asia, has grown much faster than our trade with the rest of the EU did in the last decade, it really tells you a lot about the fact that this isn't really a first order issue. And of course, what motivated people in the campaign actually wasn't the dry economic arguments of trade creation versus trade diversion. It was the political argument about sovereignty, taking back control, how we saw ourselves in the world. And I think the saddest thing about the referendum, in a way, is that we are a European country. We'll always be a European country. You can't change geography, even if you can rewrite history. But you certainly can't change that fact. And many, many people who voted to leave, I suspect, love Europe just as much as those who voted to remain. It isn't a question about do you love Europe. It's a question about the political organization of the arrangements. And, the fact is that we had chosen to opt out of the two major projects of the European Union, one the single currency and the other the Schengen area with free movement of people. Well, it's very hard to believe that if you're not going to be in either of the two major projects of an arrangement like the European Union with a clear political purpose to it, that actually we are contributing anything to it or getting a vast amount out, because most of the summit meetings we would go along and stop them doing what the rest of the area wanted to do, and we had to try and drag them back, and this led to a very unsatisfactory relationship. So my belief is that once we get over the transitional problems that may or may not arise, that we'll be able to create a good relationship with the rest of Europe, that if they wish to go towards a political union in order to support their single currency, that is their decision. We won't be trying to prevent them from doing that. We won't be being awkward, but we can have very good relationships with them. And I don't think anyone in the UK really thinks we should join the single currency. I think the major political parties are against it. And I can't see Parliament for certainly the long foreseeable future being willing to vote to join the single currency.
If we can just take you back to what you mentioned there about WTO terms and a no-deal Brexit, there are, of course, those who have very serious concerns about the economic ramifications of that. And some experts have said, understandably, that you cannot simultaneously argue that it's okay to leave a free trade arrangement with our largest export and import market and trade solely on WTO terms, because that's what everyone else in the world does, and then try and strike free trade deals around the world. They would argue that moving back to WTO terms represents a major step back in free trade. Why are you so confident that no deal is nothing to fear?
Because the average tariffs and difficulties imposed on trade are actually relatively slight in terms of manufactured goods. There are challenges in one or two instances, agriculture being one of them. Though it's very interesting to note that one of the major arguments against joining the common market in the first place was that it would mean much higher food prices in the United Kingdom, and that would damage the welfare of low-income families. So we have a choice. We have our own choice here as to whether we decide to move back to an era of much lower food, or whether we accept higher food prices and subsidize large farmers in the United Kingdom. That's a question for the government, but we would have a choice about that. The motor car industry is another industry that will be affected because the tariffs on that would be 10%. But we import far more cars from the EU than we export to them. So the idea that somehow this is going to be a devastating blow, given that we have a large trade deficit with the EU, does seem to me rather peculiar. And I'm not saying that there won't be transitional problems or that some industries will be affected by it. They will. But the idea that somehow this is a first order shock to the whole of the UK economy is, I think, based on what people want to believe rather than any solid evidence.
Would you say on that front, though, that in light of the uncertainty now posed with both the geopolitical tensions and issues to do with China, as well as the instability in the United States, that the post-Brexit Britain should adopt perhaps a more European or Europe-centered strategy, as opposed to trying to court a lot of these other economies that, whilst obviously offering larger markets, well, not technically larger, but perhaps economically more lucrative markets than the EU, would nevertheless pose significant risks for Britain, especially when it comes to security and also issues to do with human rights and political longevity. What do you make of this argument, Lord King?
Well, the UK is the fifth or sixth biggest economy in the world. Let's not forget that. The idea that we can't have an independent approach to these policies is a bit a bit absurd at one level. But if we had to abide by all the rules and regulations and policies set by the EU, we would easily be outvoted on many occasions on that, including security issues. So, I think this is a political issue, and you can argue on both sides. I think reasonable people ought to be able to disagree on the issue of membership of the EU and understand each other's viewpoint. I think it's very unfortunate that it's become such a sort of an issue that's affected personal relationships and so on. It shouldn't be of that kind, but it's become that. But there's no objective reason why it should be. The issues are political. People can disagree on that. My point is simply that I don't see the argument for suggesting that this is going to have a dramatic effect on the British economy. Joining didn't have a dramatic effect on it. The big changes in the British economy in the post-war period were a combination of the bipartisan approach to monetary policy, where people realized that inflation was caused by the failings of monetary policy, and that incomes policies, the attempt to intervene directly into wage and price setting, were not going to be successful. And on the other hand, the microeconomic reforms, which Mrs. Thatcher introduced to reduce monopolies, to create competition in many markets where it didn't exist, and to privatize a lot of very inefficient state monopolies. Those are the things that had, I think, quite a big impact on the British economy. But economies sort of chug on. It takes an awful lot to derail the underlying growth rate of an economy, which is also why it's difficult to improve the growth rate of an economy. So I think we should just not exaggerate the impact of these things. But I can perfectly well understand that there are arguments for, and many people believe, that it was a mistake to leave the European Union. And I respect those views. I understand it. I think it's a shame that we didn't spend more effort right at the outset in saying we want to collaborate with the EU on those parts of European projects that we could easily participate in without being a formal member of the EU. Education and research was one of them. Security, foreign policy is another. Defense issues, Britain and France, as nuclear powers, have a special relationship, and there's no reason why that should change. We will disagree on some aspects of foreign policy and agree on others. But I don't see being a formal member of the EU is actually at the heart of that.
That's very fair. And I was just wondering, moving on from Brexit, really, you were quite critical of Mark Carney's tendency or the warnings of the alleged economic shocks caused by Brexit. But more generally, and in order to shift our conversation away from Brexit, how do you rate the tenure of Mark Carney and your immediate successor?
I don't think it should be for me to give marks to anyone who succeeded me. And I'm not going to go down that path or that direction. We've had a series of very good Bank of England governors, and I think both Mark Carney and Andrew Bailey are doing very good jobs. And I'm sure that Mark will reappear on the international scene before long.
Mm-hmm. Look, if I could just ask you about a new book that you have out this year. You mentioned it earlier on. It's entitled Radical Uncertainty, Decision-Making for an Unknowable Future. It's co-authored with John Kay. I know you co-authored books with him before. If there are one or two rules from that book that could pithily encapsulate what it's about, what would those be?
Well, in essence, in economic policy, it's vital to avoid bogus quantification. It's to recognize that most of the decisions we have to take are one-off decisions. They're unique. They're not like rolling a dice or pulling a card out of a pack of cards where you know the odds. You don't know the probabilities. You have to ask the question, what is going on here? Numbers matter, but the point, the use of economic models is not to give you predictions of the future, which are mostly worthless, but it's to help you understand what information you should be collecting. So I give you an example. COVID-19, in our view, is a classic example of radical uncertainty. Indeed, in the book we said, when we sent it to the publisher last summer, we said we should expect to be hit by an epidemic of an infectious disease caused by a virus that does not yet exist. But knowing that did not enable us to say the probability of a virus emerging from Wuhan in China in December 2019 is 17% or 27% or some other number. And to discuss it in those terms would have been completely misleading and unhelpful. What you know is that we know something about it. We know pandemics exist. I think it was reasonable to conclude that a pandemic at some point was likely, and in which case the conclusion is not to engage in bogus quantification or make predictions, but to say, well, we better be prepared for it. We must make our health system resilient and robust so that we can cope with a pandemic. And when it hits, the important thing is to say, we don't know very much about this virus. We don't really understand the disease that it produces. What information do we need to have to make the difficult judgments to navigate between deaths and loss of GDP? And the information that we needed really was things of the sort, what is the mortality rate from this virus? And that would have suggested immediately doing large-scale random testing of the population to find out how many people actually had the virus, and then to link that to the number of deaths. We didn't do that early on. It took a long, long time before we got round to doing that. And so we were going into this without really the right kind of information. And the predictions that the epidemiological models made were bound to be highly sensitive to parameters about which we knew very little, both about the virus itself and about the response of businesses and households to the measures that governments were going to take to deal with it. And indeed, we don't really understand very much about household and business responses now that the restrictions are gradually being relaxed, and we will learn as time goes by. But the idea that we know enough to plug in numbers or parameters into a model, turn the handle, and out comes an accurate prediction is hubris, and it's a very dangerous thing. And the book discusses at some length many examples where people have misused models, misused numbers to be overly confident about the outcome, and as a result made big policy mistakes. And if you know something but not enough, you need first of all to ask the question, what is going on here? So you actually think through what is happening. You construct a narrative to guide policy, and you challenge that narrative at every point by bringing in other people to challenge it. And you don't rely on arbitrary probabilistic statements. You say, in this situation, we really need to focus on resilience and robustness because survival matters. And I think you will see many businesses down the road now moving away from the just-in-time supply chains towards a model that takes much more account of the issue of the ways in which their business could fail if they don't take enough account of the need to make it more resilient.
Before concluding this interview, if I might just ask one final question. Looking back with hindsight, of course, you're no stranger to challenging economic crises. What do you regard as your greatest achievement as governor of the Bank of England? And if I might ask the converse side, what do you regard as your greatest failure in that respect?
I think those are judgments that other people have to make. I don't think it's easy for me to do it. I think changing the internal structure of the bank, putting in place what I thought was a more rational structure of the bank was important. But if I take my career at the bank as a whole, not just the 10 years as governor, but the additional 12 years I was at the bank, I think it's the introduction of the inflation target, the creation of the inflation report, the development then which created independence for the Bank of England. The development of the credibility of the Bank of England as an independent agency that could talk openly in public to businesses, households, going around the country. I went every month on a regional visit to a different part of the UK. I think we built up a lot of support there. And of course, the price of that was that I had less time to go to city lunches and dinners because I was often outside London. And I think that, I paid a price for that when it came to the financial crisis because, if I'd wined and dined the bankers of London more, they might have been more supportive during the financial crisis. Yeah. But the fact was that in the financial crisis, we asked the question, what is going on here? And the answer to that question was not just that there was a shortage of liquidity in the banking system, but the banking system was not resilient. The regulations had been too light touch beforehand, and the banking system needed to be recapitalized. And the banks were reluctant to do it themselves, and in the end had to be pushed into doing it and required public sector ownership of 2 or 3 of the major banks. I think the UK can be proud of the fact that we were the first country to recognise and state publicly that we were going to recapitalise the banking system. I think we could have done it more effectively. We had to do a second round at the beginning of 2009. But I think right through 2008, we were arguing very strongly for the need to recapitalise the banking system.
Well, King, we've covered a lot of ground today. Been very interesting to hear your insights and experiences. Thank you very much for your time.
Thank you very much for your time.
Thank you. Goodbye.